Hey miners, welcome back to the channel McNallie Money, the new home of power mining analysis. In today's episode, Anthony Power and I are joined by the CEO, President, and Director of Gryphon Digital Mining, Mr. Rob Chang. We've got a lot to go through in today's presentation. Gryphon just came out with earnings, and on top of that, they just announced some acquisition or M&A activity. Now, in today's presentation, we're going to be going through all of that in addition to subscriber questions. But before we do, take a second, smash the like button, you guys. It's a big help to myself and the channel. If you're not already subscribed, McNallie Money, feel free to join. And let us know in the comment section below if you're currently holding shares of Gryphon, what you thought about their results, and their major press release that came out this morning. Now, with that being said, let's get into today's video. Okay guys, so that's right. Today's video, we have Rob Chang back from Gryphon Digital Mining. He's the CEO, President, and Director of this organization. Now, Rob, we've got a lot to go through in today's presentation. You just came out with earnings. You guys just announced a very exciting acquisition. A lot going on at this organization. But first and foremost, thank you so much for making the time. Great to see you again.
Yeah, it's great seeing you guys. It's always fun to be on.
We almost didn't make it today, Rob. We had a little technical difficulties, but Anthony's here in person. Anthony, we're glad you could join us here today. Because it's been a couple of months, Rob, I think your last time on the channel was maybe in May, towards the end of May. Can you give us a quick update on what's really been going on? I know you guys were working on a lot of M&A discussion. You mentioned about 25 active leads that you were working due diligence on. Can you give us a quick update on your activity?
Yeah, so it has been a little bit, so happy to share. So we've been pretty busy. First off, very happy to celebrate that that we were included on the Russell Microcap. And so we believe that's a testament to the work we've been doing in building an efficient miner that was deemed worthy of being included in such a prestigious index. So very happy that we did that over that period. We've also, as you just mentioned, been working very hard on analyzing opportunities for growth. We've looked at over 25 different opportunities, and it was very eye-opening. One of the key takeaways that we actually saw from looking at so many different opportunities is that they're available for a reason and not necessarily a good reason. Because obviously if they're doing well, they probably wouldn't be for sale. So what we were looking at is we could potentially have acquired some size several times over. We could have done so. However, those would usually come with less efficient and higher cost operations. Now, granted, I fully recognize that Gryphon's pretty much leading the way or in the front quartile in terms of both efficiency and for lower cost. So we did understand that maybe taking a little hit would make sense, but many of these opportunities are actually kind of on the edge, if not fully already uneconomic, let's call it. And so we could have announced some size. However, it would have created a larger company with perhaps a big problem that we would have to deal with later, in that we would have to deal with an even larger operation. And if Bitcoin economics dropped a little bit more, it would have been just a big negative to have to deal with. So we decided to expand our focus group, not only just looking for acquisitions, but also focusing specifically on looking for ones that are 4-cent power or lower. And so we've changed the view and zeroed in on those opportunities, because really, frankly, it's more a matter of building a company for the long term. We didn't want to just announce something for current growth, but we want something that not only would be helpful in the short term, but something that really could survive the next few halvings, because the halving was such a shock event for some companies, and we were talking about this for quite a while, whereby the halving would be a reckoning for some companies, and it has, because some companies are struggling and have put themselves up for sale or other things, and that's not necessarily the groups we want to be with. So what we want to do instead was grab as much low cost power as possible, because once you have low cost power, which is probably the most important cost driver in the entire business, then you could do a lot of different things. So now we're looking at more mining, potentially even hosting, looking into HPC. So lots of different opportunities, and we're really excited. And through that period, since we last talked, we've identified quite a strong pipeline. We see over 500 megawatts of opportunities that are similar, and very excited to not only announce what we just announced today, but hopefully a few more in the near future.
Yeah, we're excited to hear about that. We'll talk a little bit more about future M&A in a second here, Rob. I was going to ask you, though, as you narrowed down that pipeline of focus under 4-cent power, you're really open to any type of power data center opportunity. Hey, it doesn't necessarily need to be mining, hosting, HPC. You're open to all of it?
Yes. So Right now, we believe the game is to find as cheap of power as possible. And once you do that, you can do anything else you really want to. Of course, we're a Bitcoin miner, so our natural default will be a Bitcoin mining. But at the end of the day, we are also running a publicly traded company. Our duty is to our investors, and whatever would generate the best cash flows and the best returns is what we're going to do. And so we've seen many of our peers move over to HPC, and that's certainly something that we've noted in a prior release, that we've now started accommodating that type of thinking in all of our future projects and things of that nature. There could be something else that comes along that could be even better. But at the end of the day, the common denominator that makes the most sense is low-cost power. So that's the first focus for us.
That's great, Rob. I mean, obviously, you've just released earnings for the latest quarter. Can you sort of just run through very quickly some of the highlights from those earnings and what shareholders should be looking out for in terms of the positive story?
Yeah, so we think we had a pretty solid quarter. So for the quarter, we made 5.5 million, and that's an increase from 4.9 for the same quarter of last year. Our break-even cost is now $45,452 per Bitcoin, which is lower than the average cost. As you look at, there's a site that I follow called Macro Micro. The costs that they reported last night was 74,384, and that's using Cambridge University data. They pulled this out. So that's kind of the global average, which is really above where Bitcoin's trading at right now. And ours is fairly competitive. We're actually very competitive relative to that. And as I've said before, we're always really proud of the fact that we're generally on the front end, on the lower end of the peer group in doing that. For the quarter, we produced 84 Bitcoin. Very happy about that. And we also set a company record in mining fleet efficiency through upgrading our machines. We're now sitting at 28.5 joules per terahash, and we're looking to improve that as we go as well.
Yeah, no, that's. I mean, obviously, it's good numbers, and we know that you've production-wise, you've been sort of in that top, certainly that top quartile of miners over the last 6-7 months as I've been covering you. I did have a quick look at the balance sheet, and the only one sort of like thing that stood out to me a little bit was the sort of like the notes. Can you give a little bit more detail about the notes? They're sat in current liabilities, so I'm assuming that there's an imminent requirement for those to be converted, or what? Tell me more about what's happening there.
Yeah, thanks for the question, because we do get asked about this a lot, so it'll be a good opportunity for people to listen in on it. So yes, we do have a note, and as noted in our financials, we have approximately 300 Bitcoin in debt at an interest rate of 6% that's due in May of 2026. But however, because of SEC reporting rules, because the debt is denominated in Bitcoin, we are required to put it all in current, even though it's not actually there. It's more than a year plus away. So it's a nuance that the SEC is required of us, and we are, of course, beholden to them as a NASDAQ-listed company, so that's the way we work. And payments for them, it's secured against a subset of our machines, and that happened to also be the older ones, or the first ones that we bought, so around 7,000 of those, and the other machines are not encumbered at all. And payments for these are actually very flexible. So the way these work is, on the machines that the loan is encumbered on, we have a gross profit sweep of the profits that go off of that after we account for some G&A and for the gross profits for it. We then send the rest on. So it's not a situation where it's a set number. Instead, it is a fluctuating number that's entirely based off the profitability only of those machines. Now, we can, of course, elect to pay a little bit more if we want to, but it's a floating number that is not designed to put a necessary stress on the company. And we're very happy and very thankful that our partners in the financing are open to doing that, and we're actually in constant communication with that. They are, of course, aware of our growth plans and are actually very excited about them as well. So it's a good piece of debt in arms.
Yeah, thanks for sharing the highlights there, Rob. Really exciting quarter, and looking forward, it's about to get even more exciting because you followed up that press release with another one talking about a fairly major acquisition for a company of your size, Rob. You've been talking about M&A. It sounds like you're still very busy working on M&A opportunities and discussions, but lo and behold, you've already brought one to the table and put one out public now today, hey?
Yeah, we're very excited about it. So happy to chat with you guys. So great timing for us having this meeting. So we have announced that we've acquired up to 2.9 megawatts of currently operating energy and mining assets. As a reminder, Gryphon currently is 28 megawatts, so it's just over 10% just on this one deal alone. Energy cost is what we're super excited about. I talked about us focusing on 4-cent power. Well, this is around 1-cent power. So we believe this is pretty much on the leading edge relative to most in our industry. And of course is exceptionally competitive. It also comes with 59 petahash with existing miners on site. So we're just going to take those, let them start running, and of course upgrade and switch as we need to. but that will immediately push Gryphon's self-mining hash rate to just about a 1 exahash in total. So we can no longer have to say 0.9 anymore. We can say full 1 at this point. We're very happy about that. And it's not that expensive. It costs us 1.5 million, and we believe it can be focused. It can be paid for with existing working capital as well. So very excited about that. And also on top of that, it's also a good way for us to have this other conversation, and that we're looking around because there's lots of different valuation metrics that mining companies have. We did take a look at it in terms of valuation market cap per megawatt. And when you look at different companies and how much they've deployed, we've noticed that in general, the market has generally been providing call it 1 million per megawatt to 7 million per megawatt on a valuation basis, with the average being around 3. And so we believe that adding low cost power, which we believe should deserve a premium, is a decent way for investors to look at Bitcoin mining companies in general to see what their valuations are worth based on at least that metric. So we're very excited about looking at that and analyzing that situation. And of course, the other thing to talk about is we're still maintaining our environmental stewardship. We're very proud of the fact that we have been zero carbon for our existence. This is a slight twist on that, an expansion of that thinking, just like ESG has expanded in the way everyone's been looking at it. This is a flare gas opportunity. So what we're doing is we're actually taking the byproduct of oil extraction that usually gets flared away, and so that's carbon emissions that go right into the air because it's a byproduct, it's a waste product. We're actually taking that waste and now using it for something that actually provides a benefit. And of course, because we're using the energy, there's less carbon emissions because of it. So we're actually helping the environment by using what would have otherwise been shot out, flared out, and released into the atmosphere. So we're very proud that we're doing something like that as well.
Now, similar to like Stronghold Mining did with their waste coal site, converting that into energy and repurposing the site. So in a different way, but the positive news story comes out of that, and hence the price of 1 cent a kilowatt hour, which is I haven't seen anyone come in as low as that. I mean, some miners when they use their demand credits or their power sales, maybe potentially get quite low, but 1 cent is pretty much at the lowest I've seen of any of the miners. So that'll be intriguing to see how that fits in the next sort of like few quarters when you're doing the comparisons. But you're quite right, Rob, that energy is the key to the whole mining industry. And now we're seeing mining in HPC. Keep your energy costs low, keep your efficiency of your miners as low as it can be. And you can get through these troubled times because we've seen the hash price go to an all-time low of about $34, $35 in recent weeks. And yes, it's slowly going into the 40s now, but that's still significantly lower than we were expecting it to be pre-halving for the post-halving amount. So it's been a challenge for all the miners, but what's good to see is that you and along with a number of other miners in the North American sector, with the efficiency, with the low cost energy, coming out and telling us about your cost to mine Bitcoin is still in a relatively good position. So we're not hearing the switching off of machines quite yet.
Exactly, and I'm actually glad you brought up the whole credits issue because we can potentially get credits, and we're not even including that benefit in the numbers that we've been talking about. So it could be even lower than 1 cent.
They're going to be paying you to take power. Hey, I wanted to circle in on that because, Rob, I'm not sure if you're aware. I live in Calgary, Alberta, so this is the big oil and gas hub for Canada. And when the Bitcoin mining ban hit China, a lot of my friends work in this industry, so they had tons of people calling from China saying, hey, we need energy. We have all these miners. We want to come over. Flare gas was a really big discussion. So for people who are unaware, they essentially have these oil and gas facilities. They can't process all the natural gas, so they literally have a pipe that goes up into the air and they just burn it. So it's going nowhere. So Rob, I take it this situation you have, they're saying, hey, rather than burn this natural gas, we'll sell it to you for a cent. That's the thinking, hey?
That's exactly it. So it works out in very positive ways for everyone. They make a little bit more money instead of making it a cost. We get low cost power, and the environment benefits from less carbon emissions. So it's a win-win-win.
So I got to ask then, Rob, you said you have additional M&A on the horizon. There's oil and gas flaring stations everywhere in Alberta. Do you see this as a longer term trend for the industry or potentially a niche for Gryphon?
Yeah, well, there have been other companies that have done it before, and so we're kind of following the footsteps and doing our own unique twist, which I would like to say is more of a private thing for us that we probably won't share yet. But it is part of the 500 megawatts of identified opportunities that we've noticed. It's not just that type of just that type of power, but it does make a notable portion of that 500 megawatt potential opportunity that we have. So absolutely, we're keeping our eyes open. If someone's willing to give us power for less than 4 cents, we're very interested. And so that certainly follows. And yeah, we're out there looking, and it's been something we've been constantly looking at for the last couple of months now.
In terms of the new acquisition, is it something that you're going to grow your hash rate in there, or move current hash rates there, or are you going to look to put new hash rate into this acquisition to grow that, as well as keeping your current fleet where it is at the moment?
The answer is yes for all of it. The reason why is we're going to analyze it based off of whatever gives our investors the best return on investment. And so with this one, it already comes with some machines, and we have a good history with those, so we'll look at that. Low-hanging fruit would be maybe just to upgrade those machines, or maybe switch over some of the extra machines we have lying around and put them in there. However, we are going to analyze. If we can turn this into a high cash flow HPC opportunity, we'll do that. If hosting makes more sense for that, we might just take out those old machines and put someone else's newer gen in there and make a better profit off that. And so the answer is it depends, really, not just yes, in that whatever gives us the best return is what we're going to do with that. And all future power acquisition candidates will make that same we'll go through that same thinking process for each one of those.
In terms of your conversations post earnings with the analysts and the Wall Street guys about Gryphon and where they are at the moment, how much of those conversations been around HPC rather than sort of like Bitcoin mining? Can you give me a flavor of sort of like those types of discussions and the general conversation that we're currently hearing at the moment compared to what we were hearing maybe 12 months ago?
Yeah, everyone's always asking, is it part of our strategy? That's very common now, given how successful it's been for so many different companies. Of course it is. Given that we haven't really done much yet, and we've only just announced the ability to even do something like that now, I'm sure the conversations will get a little bit more in depth. But before, it was more a matter of, is Gryphon interested? Yes, we are. And what would it look like? Well, it depends on what power we have. But now we have power, we can maybe dive a little bit more. But certainly all analysts care about HPC and AI. And of course, why wouldn't you? It's such a profitable business right now. But will it still be profitable in 5-10 years? Probably. But let's see.
Now, last time we chatted, Rob, you had mentioned the 6 exahash target as kind of the end of 2024 goal. Do you think that's still in sight now with this acquisition and with these additional M&A opportunities?
Yes, but the way we like to look at it now is we can enable that hash rate with low-cost power. And now that we're looking at whatever is the best return on investment for investors, it might not necessarily be hash rate, because I could feasibly acquire, theoretically, 100 megawatts and decide to make it all HPC, right? That's not 6 exahash, but I'm pretty sure a lot of people will be very happy with me doing that. So I would say that it's not necessarily a change. We are still trying to do aggressive growth, and we are hoping to announce more similar deals at larger sizes in the near future. But to say just 6 exahash, I think might be a little limiting, whereas we're really looking at growing the company overall. And right now, we believe the best possible way of doing so is by expanding our power, the control of power that we have, because that will enable us to do 6 exahash or large scale HPC mining or large scale hosting. So I think maybe the best way of saying it is that we're looking to grow aggressively, and 6 exahash was a nice metric if we were doing it based off of hash rate.
Makes sense. Now, a follow-up on the HPC question there. We've heard from a number of the CEOs going into this space, Adam Sullivan, for example, or Sam Tabar, that there's a tremendous amount of legwork involved, a lot of components, pieces, equipment, engineering that needs done before you can convert these facilities. I know with your team, Rob, you only have 3 people at Gryphon, which is great in a lot of situations in terms of nimble and SG&A and costs and things like that. So it's a 2-parter. Do you guys have the skill set within the internal group to start looking and building HPC opportunities? And then as a second component, have you looked at securing and sourcing some of these materials?
So when we have a small team, it doesn't mean we're not using consultants, and we have quite a few consultants that we're talking to, and we have identified that at the right time we'll bring them in-house. And so the team officially is 3, but it really is over a dozen with the amount of different people that we're working with. And with that in mind, as we progress through any opportunity, HPC being one of them, as it becomes more clear that we're going to be doing that, we'll obviously start staffing appropriately to do those. And we have identified several individuals. Of course, always open to meeting more people because you can never have enough smart people around in the room. But certainly we have the horsepower to do so. We've been in contact with those.
Okay, makes sense. And in terms of the actual materials and lead times, do you find that a potential restriction, or have you started those discussions as well?
Yeah, well, we just signed our power contract or this power deal on Friday, so it's only been a few days. It is part of our thinking process, and we've already been mapping out different possibilities. So if that's the one that certainly makes sense, we'll start doing that process. But we don't have anything much to share on that yet, because it's still which branch we're going to go down first before we start looking at acquiring. And of course, the lead times is one of the considerations, because if I can't build this anytime soon, it might not make sense for us to make it up just to do one or the other thing at this juncture. So it's something to certainly consider.
Sure.
In terms of the industry at the moment, and there's probably close to 30 publicly traded Bitcoin miners in North America. We've seen in recent months the likes of CleanSpark acquire Grid, and we've seen Riot acquire the block, and also looking to acquire a much bigger miner in terms of Bitfarms. Where do you see Bitcoin mining in terms of consolidation or and merger acquisition over, say, the next few years? Do you see less miners but bigger miners dominating the space, or do you still feel there's enough room for some of the smaller miners to manage during these halvings when things become a little bit challenging in terms of growth? We look now at, there seems to be like a divide. You go down as far as Bitfarms in terms of the 1 billion plus market cap miners, and then if below that you've got the likes of, I think it's Hive Digital and Bit Digital, around just about 400 million, and then you go down to about 100 million when you've got the likes of DMG, then yourselves and the Salooners, the Satos, some of the small miners out there. Where do you see the industry sort of like, in the next couple of years? Do you think people can still carry on where they are, or do you think there'll be a lot more M&A activity?
I think more M&A activity is certainly going to happen. It's difficult to operate as a smaller miner when the world believes only large makes sense. We have noticed it too, where we have been leading the way in operational efficiency and among lower costs, and been getting less love simply because the world just believes larger is better, period. It is possible, let's say, that to survive and to thrive really as a smaller miner. I do think that it is also a matter of execution, though, because simply bolting on smaller of the same thing, smaller amounts of the same thing, when there are larger players able to do it at larger scale, may be a more difficult, more challenging environment. So I think it is the execution and strategy of the smaller companies that will set them apart. And that's actually one of the main reasons why we've been focusing on low-cost power, because again, I could just add 20 or 30% more hash rate, but how much is the market going to care? It will give me a reward for that for sure, but is it going to be a game changer? Less likely. And so if I can lock down lots of cheap power, it gives me a pathway to grow really quickly. And that's the reason why we're doing it this particular way. That also leads to the fact that with M&A, if someone sees a smaller player with lots of power, they might try to snap us up. Not gearing towards doing that, because I'd like to run the company and grow it, but I fully could possibly see that once you secure a ton of low-cost power, someone might just try to swoop in and take it. And so that's also a possibility. But at the end of the day, I think the best operated miners will survive and will be acquiring the others. And I still believe that, regardless of size.
Interesting to take your view on the sort of like the latest, well, I would say latest news, but it's been gone for about 18 months. The actual the issue with with Riot looking to take over Bitfarms. You having previously been at Riot as a CFO, I mean, when you saw that news come to light in April this year, how do you see that playing out in terms of the market at the moment? And do you think it's a good or bad or indifferent thing?
It's interesting. I I try not to maybe make comments specifically about what my peers are doing, but it's something that I'm not surprised in seeing a large player acquire another one. Bitfarms did come into quite a bit of power that just went online, and so it was an opportune time for someone who wants that extra power to grab it. And so looking at it strictly from that standpoint makes a lot of sense. And yeah, I'll leave it at there, but there's lots of potential activities that can happen in the space.
Thanks, Rob.
Hey, Rob, I know you guys have a ton going on, extremely busy with earnings and all this M&A activity. Most encouraging to me, though, is to see how patient your team's being and how selective with these opportunities. The 1 cent power, like Anthony said, I've never even heard of that. 2.7 is the best I've ever heard of. And we have Cypher coming on next, actually, so we can ask Tyler about how he feels about losing that title. But I wanted to ask you, Rob, are there any other catalysts or potential opportunities we should be watching as retail investors here in the Gryphon story?
Yeah, well, first off, thank you for mentioning that, and I appreciate everyone's patience in us finally executing and now being able to announce what we've been working on. The future pipeline is hopefully more of the same. We have been working on, as I said, a pipeline. We've gone through 25 different ones. We have 500 megawatts in front of us that we see as a potential opportunity, and we're looking to hopefully announce a lot more of the same type of thing or similar type of announcements in the near future. So keep your eyes peeled, because we haven't stopped, and we've always been running through 3 or 4 different tracks at the same time.
There you go. Well, we're here. We're waiting. We're excited to hear each and every one of these updates. Congratulations on the quarterly earnings, Rob. Great to see so much activity going on at Gryphon while continuing to keep those efficiency metrics top of the pack. It's really great to see. So we appreciate your time. I'll throw it back to you, Anthony, if you have any closing thoughts here, and then we can wrap it up.
No, I mean, a great update today, Rob. I'm still sort of like bewildered at how you can achieve 1 cent. It is industry leading, and like Bryce said, we've literally got Tyler coming on in a few minutes' time, and we'll be saying, the second cheapest miner out there, because I'm sure he would have started his conversation at being the cheapest. But that's showing the fact that you have got that sort of patience to wait for the right deal, because at the moment there seems to be a lot of activity out there, so it's choosing which ones are the ones to actually pick in this type of environment. That's going to be the success for you guys. So look forward to hearing more updates in the near future. As soon as the next one comes on, we'll get you back on the podcast in a timely fashion, because literally this announcement just came out, literally in the last hour or two. So we're really pleased to have been able to sort of like let you tell the shareholders exactly what's going on currently. It's great to hear.
Thank you very much, and always happy to be on. So look forward to the next one.
You guys, if you're still watching, make sure you take a look at Gryphon. I'll leave the corporate website linked in the video description below. They've got a small team, but it's a mighty team. Rob, you guys have a tremendous amount of industry experience working at big companies, which obviously you're aspiring to grow into now. So it's great to see this story. It's great to follow along with the press releases. If you're still watching, guys, hit the like button, subscribe to the channel. If you have any questions for Rob and the team that we weren't able to get to today, feel free to throw them in the comment section below. We'll add them to our list next time. Rob, appreciate all the info today. We'll see you soon.